So hi friends, there was some technical error happened. So I hope you can hear my voice. Friends, am I audible? So friends, am I audible now? There is some technical problem. I think there is some problem happened in between again. So friends, am I audible? Can you please respond? Yeah. So where were we? We were discussing about that question Sarthak, right? So total income of Mr. Sarthak shall be 23 lakhs. That is the conclusion that we can frame. Now question number two. Sub question number two. What would be your answer if income arising in Dubai, a profession set up in India is 2 lakh instead of 10 lakh. So instead of this 10 lakh, if it is 2 lakh, what would have been to your answer? Then his total income from Indian source will be exactly 15 lakh, right? If it is more than 15 lakh only, he will become a deemed resident. If it is exactly 15 lakh, then he shall not be treated as a deemed resident. And hence we can write he is a non-resident in that case. So if instead of 10, if it is 2 lakh, then his total income from Indian source will be exactly 15 lakh. If it exceeds 15 lakh only, this concept of deemed resident will come into the picture. Otherwise, we don't have to go with the concept of deemed resident over there. No, then he will become a non-resident because he haven't stayed in India for a single day. Then what would be your answer if Sarthak is born in Dubai and his parents were born in India? If Sarthak is born in Dubai, then we can say he's an Indian, is not an Indian citizen, he's a citizen of Dubai, right? And hence we can say he is a non-resident because for deemed resident, for that deemed resident thing to be applicable, the one thing that you should know is that person have to be an Indian citizen technically. That person have to be Indian citizen. So if Sarthak is born in Dubai and his parents are Indians, then we can call him as an Indian origin. He's not an Indian citizen. Alright? So if he's an Indian citizen only, that deemed residency status thing will come into the picture, otherwise not. And hence, in that case also we can conclude that he is a non-resident. So I hope all the three situations are clear for you. Now moving on with the question number three. That is the last question in that first chapter, residency status and scope of total income. So I want all of you to read this question number three. Will take 2 minutes and have a plain reading. Just read the question, okay? That's it. Just read the question, understand the circumstance, and we will solve it together. Right. So let's understand what is the question number three. Miss Rita, an Indian citizen and an MBA from Harvard University, was employed in AFL LLP of country A since June 2017. She came to India on 15/11/2024 as and joined as CEO of AutoFit Limited. Miss Rita was in India before she left for overseas education in May 2013, and she was subsequently employed outside India and never visited India thereafter. There is no income tax in country A. Again, country A is a tax haven. She has earned an interest income of 2,40,000 net in country A and salary income from AFL Limited LLP of 15 lakh up to the date of her return to India in the financial year 24-25. Salary income computed of Miss Rita from Autofit Limited up to 31st March 2025 is 13 lakh 50, and she earned a dividend income of 3 lakh from shares of an Indian company. What would be the residency status of Rita and her total income for assessment year 25-26? So we'll read the question and understand the scenario. All right. So what exactly is that question? I'll read the question from here. Miss Rita, an Indian citizen and an MBA from Harvard University, was employed in AFL LLP of country A since June 2017. She came to India on 15/11/2024. On 15/11/2024, she came to India. Right now, and joined as CEO of Autofit Limited. Miss Rita was in India before she left for overseas education in May 2013, and she was subsequently employed outside India and never visited India thereafter. There is no income tax in country, and she earned interest income of 2 lakh 40 net in country A, and salary income of AFL Limited LLP is 15 lakh. So she came on 15th November. So how many days she is in India for November? For November, we know that from 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28, 29, 30, 16 days. December 31, January 31, February 28, and March 31. So in the year 24-25, her total days of stay 16 plus 31 plus 31 plus 28 plus 31. How much is 16 plus 31 plus 31 plus 28, 24, 25, 28 plus 31? It will be 137 days if I'm not wrong, right? We will make use of the calculator for doing that math. So 1 second. Yeah, so 16 plus 31 plus 31 plus 28 plus 31. It will be 137 days. That is his days of stay in India. So he is an Indian citizen, and since he is an Indian citizen, his days of stay is 137, which is less than 182 days. First condition is not applicable for becoming a resident. Now, second condition is 60 days or more stay in the relevant previous year plus 365 days or more stay in immediately for preceding previous year. So that particular condition is not applicable to whom Rita. Why? Because he is an Indian citizen residing outside India, comes on a visit to India. So that particular condition is not applicable for Rita. So the third condition is 120 plus 365 days. So for applying that 120 plus 365 days, her total income from Indian source have to be more than 15 lakh. So as you know, she got a salary of how much? Exactly 15 lakh, sorry, 13 lakh 50,000 from that Indian company. 13 lakh 50,000 from that Indian company, which is computed. That means all the standard deduction and the other thing have been already adjusted. Plus she got a dividend income from Indian company and that is rupees 3 lakh. So altogether her income will be 16 lakh 50,000. Okay, her income is around 16 lakh 50,000. Now, if her income is 16 lakh 50,000, then what is the next thing to do? So that is more than 15 lakh. So what we can write is she can be a deemed resident. She's staying in a tax haven and she will become a deemed resident because for becoming a deemed resident, her number of days of stay in India is not a criteria for becoming a deemed resident. So she will become a deemed resident and hence we can say she is an RNOR. If she is an RNOR, you tell me which all are the incomes taxable in India. Anyways, that 13 lakh 50 and 3 lakh will be fully taxable in India because both are accrued in India. So 16 lakh 50,000 itself will be the total income in her case in India. So that is again a direct question. There is no confusion in that. She is an Indian citizen residing outside India. Her total income from Indian source is more than 15 lakh and she become a deemed resident. If she is a deemed resident, then she will become an RNOR. And that is how you have to solve the answer. I hope that also is clear for you. So by that we can say chapter 1 is over. And chapter 2, that is salary. So now we will solve questions regarding the chapter salary. So again, I want all of you to just take 2 minutes, read this question number 1. Just take 2 minutes, read that question number 1 from the chapter salary. So hope you have read that respective question. We'll solve the answer together. Mr. Anshul, a salaried employee in a private company, furnishes you the following information for the year ended 31st March 2025. His basic salary is 75,000 per month. From 1st December 25 to basic salary increased to 85,000 per month. So they are giving a lot of information. And what is the final question? Compute the taxable salary of Mr. Anshul if he have shifted out from the default tax rate under 115 BAC. So he has opted old slab rates, not 115 BAC. Now, if you have opted old slab rates, they are asking you to compute his taxable salary. So our mission in this question is to compute his taxable salary if he's opting the old tax rate. So we'll parallelly read the question and start solving the answer. So the first thing is, they're talking about the basic salary, right? So basic salary is 75,000. So we can write a heading computation of salary. Basic salary is how much? 75,000 per month till 1st December. So 75,000 per month till 1st December means how many months are there? April, May, June, July, August, September, October, November, right? 8 months are there. Then December, January, February, and March. 4 months, his salary is 85,000. So 8 months plus 85,000 is his remaining salary into 4 months. So 75,000 into 8 months will be 6 lakh. Then 85,000 into 4 months will be 3 lakh 40 plus 6 lakh will be 9 lakh 40,000 will be his total basic salary. So that is the basic salary. Now what? DNS allowance 50% of basic salary. That is 40% of DA forms part of salary for retirement benefit. So we will take full DA. So full DNS allowance is 50% of basic salary. So 9 lakh 40,000 into 50 percentage. And how much is 9 lakh 40,000 into 50 percentage? 9 lakh 40,000 into 50 percentage. It will be 4 lakh 70,000 will be his DNS allowance. Then what next? Entertainment allowance 10,000. Entertainment allowance will be 10,000 and that will be fully taxable. If he is a government employee, then they can claim it as a deduction. Since the question is not saying salaried employee in a private company, full entertainment allowance is fully taxable. Contribution of employer to recognize the provident fund account of the employee at 18% of basic salary, and the employee also contribute an equivalent amount. So employer contribution is the 18% of basic salary. So we will write that. Employer contribution is 18% of basic salary. So basic salary is 9 lakh 40,000 into 18 percentage, and it will be 9 lakh 40,000 into 18 percentage, 1 lakh 69,200. 1 lakh 69,200 is the point. One second. Friends, can you hear me? There is, okay. I'm sorry, in between, I think there is some network problem. That is why there is a disturbance in between, okay? Yeah. So where were we? Employer contribution was 18 percentage of his salary, right? So we will write that employer contribution, that is 169,200. 1,69,200. Now for employer contribution, you will get a what? You will get an exemption. But that exemption is subjected to 12% of basic salary plus DA forms part of retirement benefit plus commission if it is expressed as fixed percentage of turnover. Hope you remember. Employer contribution to PF. The exemption shall be you have to take your basic salary in full plus DA forms part of retirement benefit in full plus you have to take commission only if it is expressed as a percentage of your total turnover. You take everything, then apply 12 percentage. So how much is the basic salary in this question? 9 lakh 40. Out of 9 lakh 40, they say half if DA. That is 4 lakh 70,000 is the DA, but they are clearly saying that DNS allowance at 50% of basic salary and 40% of DA forms part of the retirement benefit. So how much forming part of retirement benefit that you should compute next? So retirement benefit, what they are saying, only 40% of that. All right. So total DAS 4 lakh 70. Out of that, 40% forms part of the retirement benefit. So 4 lakh 70 into 40 percentage will be 188 plus that 1 lakh 88,000 plus 9,40,000 will be around 11,28,000 into 12% is how much? Into 12% will be 135,360. 135,360. So that 135,360 is the exemption. So we can write exemption 135,360. And how much is the balance amount, friends? That also we will do. Minus 169,200 is 33,840. Shall be the taxable component. Then what's next? Professional tax paid is 2,200, of which 1,800 was paid by the employer. So professional tax paid by employer shall be treated as perquisite. So that is 1,800. Shall be treated as perquisite. And you can claim a deduction for the entire professional tax paid. Professional tax paid in full. And how much is that? That is 2,200. Then what's next? House rent allowance of 16,000 per month, and he paid a rent of 17,000 per month for accommodation in Meerut. So what you can do is HRA. He have received house rent allowance, and how much is the house rent allowance? 16,000 per month. So 16,000 per month into 12 months will be how much? 16,000. Okay, into 12 months will be 192. Is the actual HRA. And under section 1013A, you'll be getting an exemption. And how much is the exemption under section 1013A? Actual HRA received. And how much is the actual HRA? Actual HRA received is, say, 192,000, or 40 percentage of the basic salary plus DA forms part of the retirement benefit plus commission. There is no commission in this question, so you need to take the basic salary plus DA forms part of the retirement benefit. That is 11,28,000. We have already computed that, right? So that 11,28,000 into 40 percentage. So 11,28,000 into 40 percentage will be 451,200, or rent paid minus 10% of that particular salary. How much is the rent paid? 17,000 per month is the rent paid, sir. 17,000 into 12 will be 2,04,000 minus 10% of the basic salary plus DA forms part of the retirement benefit. So that will be 1,18,000. So minus 1,18,000. That will be 86,000 will be limit number 3. So lower is 86,000, right? So 86,000 you can claim as what? A deduction under 1013A. So I think there is a small calculation error. So 2,04,000 minus 1,18,000. Not 1,18,000. That was the mistake, right? Not 1,18,000. This should be right. Oh, thank you for reminding me. This is 11,28,000, right? Not 1,18,000 into 10%. That will be 1,12,800. Right. So 1,12,800 minus 2,04,000, right? So 1,12,800 will be 91,200. 91,200. So lower is 91,200. You claim that as a deduction. How much will be the taxable portion? 192 192,000 minus 91,200 is 1,08,000. That is the taxable portion. 1,08,000 is the taxable portion. Now, what's next? What's the next component, friends? Next is professional tax we have done. Conveyance allowance of 1,500 per month by the company towards actual reimbursement of conveyance spent on official duty. So conveyance allowance they have paid. So what is the speciality of conveyance allowance? Conveyance allowance, if it is spent for the official purpose, then nothing shall be taxable, right? So conveyance allowance. If it is actually spent for the official purpose, then nothing shall be taxable. So nothing shall be taxable over there. Then what is next? A loan of 2 lakh was taken from the employer on 1/7/2024 for medical treatment of his brother for TB. TB is a prescribed disease. So if you taken a loan, that is concessional loan, nothing shall be taxable as perquisite. If an employee have taken any loan, concessional loan for treatment of prescribed diseases, then nothing shall be taxable. And tuberculosis is a prescribed disease, and hence concessional rate of interest. The normal rate of interest that SBI charges 11%, and the interest rate that the employer charging is 5%. So even though he's getting a benefit, that need not be valued. Why? Because it is taken for the treatment of prescribed diseases. So nothing shall be taxable over there. Then free education was provided to the sister. That will be taxable perquisite. Free education to the sister is 900 per month into 12 months. So 900 into 12 months, that will be 10,800, will be fully taxable. For children, up to 1,000 rupees is exempted, but for sister, nothing shall be exempted, fully taxable. Then leave travel concession to Anshul and his wife and 3 children, 1 daughter, age 6, and twin sons, age 4. Cost of air tickets reimbursed by the employer is 20,000 for the adults and lump sum 20,000, 25,000 for 3 children, fully exempted. Nothing shall be taxable. So that's it. These are the items that you should consider for computing gross salary. So how much is the gross salary? We will add everything together. So 9,40,000 plus 4,70,000 plus 10,000 plus 33,840 plus 1,800 plus 1,08,000 plus 10,800 will be 15,67,240, right? 15,67,240 minus 2,200 and standard deduction. 50,000 rupees you will be getting. That also you have to deduct. So 15,67,240 minus 2,200 minus 50,000 will be 15,15,040. 15,15,040 rupees. That shall be the taxable salary. So I hope that also was clear, friends.